A very good afternoon to everyone. So let us start today's session. Till date, last 8 months, when I started my Telegram channel, since then I was posting the Nifty charts and I was continuously predicting the daily chart. And more or less for last 8 months you have seen, you can verify in my channel that the predictions worked as was given at that time. So similarly, I think in Feb I have given a short trade from all-time high of Nifty and I expected Nifty to come down. It took a long time for Nifty to come down from that area, but it did. It was slow move, but it did. It has achieved my first target, but in the course of the move I have given another target. As you can see, that arrow is marked. So I am expecting Nifty to come down at least to this point. Now while Nifty is coming down, Nifty has created a certain pattern. This pattern is known as a falling wedge. If you search Google, you will find a falling wedge is a bullish pattern. It's not a bearish pattern. It's a bullish pattern. So we have a bullish pattern which formed in Nifty at a point where Nifty has already moved up a lot. So Nifty has moved from 7,500 to 15,000. That's a huge move. And thereafter we are getting a wedge pattern, which is again bullish pattern. So what will be the implication of this pattern at this moment, and whether price is really going to go and make an all-time high because it's a bullish pattern, or price is going to do something else. This is not mentioned in any book. You go through any book of trading, you go through any website, everybody will tell you that a falling wedge is bullish. Nobody will tell you that a falling wedge can also fail. With whatever experience I have seen that couple of times falling wedge also fails to give its reaction. So it breaks. Unlike all conventional pattern, falling wedge also breaks at times. So we need to know when a falling wedge can be expected to break, when a falling wedge is expected to work, because falling wedge is a beautiful pattern. I can tell you it works most of the time. So this is something which I want to tell you today. I mean, you go and open Google, you will find there are many patterns. There are many conventional patterns, advanced candlestick patterns, price action patterns. There are so many patterns. Each pattern has a certain behavior. If I look at falling wedge, it has a bullish behavior. So when we see a falling wedge, we generally predict that the price is going to go up. Similarly, if we see a symmetrical triangle and the symmetrical triangle is getting created after a rally, we expect the price to go up further because the symmetrical triangle is a continuation pattern. So every pattern has a specific behavior integrated with it. Almost all the time these patterns follow this behavior, but there are certain times when these patterns also fail, because if this pattern doesn't fail, what will happen, all of us will become super successful because you know one pattern, you master it, and every time it will work, you will make money. But is that so easy in the market? If that is so, then 95% of the traders would not have made loss. Simple. So that means even if that is true, there are times they play around and break the obvious pattern. If a falling wedge is bullish, it is obvious that price will go up, but at times they will break this pattern so that you do not get the confidence to trade this again in the future. So this is one of the reasons why many patterns fail. But if you master a pattern, you will see after some time you will know when a pattern will work and when it will not. So when you know that, when you have that distinction, definitely your trading will become better and better day by day. Here is a wedge which has formed, and generally I should be predicting that from here price will go up. That should be my ideal prediction. Before I predict that price is going to go up because there is a falling wedge, I need to verify whether this wedge is going to work or it is going to fail. How will I verify that? I need to see two things. One, where this pattern has formed and what other patterns have formed along with this pattern. So when I look at this wedge pattern, I can see this wedge pattern has formed after a big rally. So after a big rally, we always expect some kind of a correction which is bigger than any correction happened inside this rally. If this is a correction, this one is a correction, this one is a correction, and all these are small counter trends and they are correction. After a big rally, we expect a correction which is bigger than any correction which has happened inside the previous rally. So that is an important information we always have. And price cannot move up all the time. It will get overbought, and once it gets overbought, price will have to come down. So this is a continuous process. At this moment, I do not use any indicators, any oscillators at this point of time in my career. But I can assure you, if you open most of the indicators, oscillators, they might be overbought at this moment. If not, then they will get. This is a very important information which I cannot overlook. That price is standing at a point where a big rally has already happened. So that's point number one. Number two is what kind of structures which has formed along with this wedge. So when I go close and mark this area, I see a trend line, and when I mark this highs and this lows together, which pattern has formed at this area? Do anybody know which pattern is this? Anybody has any idea? Understand, every pattern, every conventional pattern or any other pattern, they have a bias. It tells you something. This is an ascending broadening top, and this happens after a rally. And what is the bias for an ascending broadening top? The bias for an ascending broadening top is that price might change its trend. So here at the top, after a big rally, at the top, I am getting an ascending broadening top, and price is reacting from the upper boundary of the ascending broadening top and coming down. Not only coming down, but it has engulfed the lower boundary of the ascending broadening top. Ascending broadening top, as I said, is a bearish pattern. So one side I have a bearish pattern which is telling me price should go down farther, and on the other hand, in the current market price, I have a wedge pattern which is a falling wedge and which is a bullish pattern. So I have two patterns back to back, and they are fighting with each other, and they are creating some kind of a trap for us, for price action traders, because one is telling you price should go down, the other is telling you price can go up. So how to understand what will happen next? Now this is something again you will not find in any book. This is from my experience, what I do basically when I face this kind of a challenge, because this is a challenge, all of you understand hopefully, that one side I have a bullish pattern and another side I have a bearish pattern. So how to go about it? How will I find out that whether the bullish one is going to fire or the bearish one is going to fire? Because at the end, one of them will definitely fire. Either price will go up or either price will go down. So I have to find out which one is a trap for me and which one is the right direction. Before I go for finding out the answer, I tell you what I do in this kind of scenario. This kind of challenge spawn appearing in front of a price action trader, and whenever this kind of a challenge appears in front of me, I start back testing the chart. What I do in the back testing, I try to find out if in the past, if ever this kind of a situation happened, then what has happened next? So what I do, I'll do a lot of back testing in all the charts, and I try to find out that if a certain pattern which in question, if that happened in the past, what happened after that? And that can give me a good idea what is going to happen here, because the latest or the current pattern is bullish. Current pattern is not bearish. The bearish pattern has already given somewhat reaction. Though this is not enough reaction, the reaction should be much bigger than what you see here. So I do a lot of back testing. So that is what I am going to do here as well. I want to try to find out whether this kind of scenario ever appeared in Nifty before, and if it does, what was the implication. So let us move on the left side side of the chart and try to find out this kind of a situation we have ever had in the past in Nifty. So this is around September 2016. As you can see, similar situation after a big fall in price started moving up, and this is quite a big move. I mean, from 6,800 to 8,900. That's a big move. So there was a very good move up during this time frame. And at the top, as I said, which pattern formed? This is an ascending broadening top. So ascending broadening top, as I said, is an bearish pattern, and we expected price to come down. Here the bearish pattern formed, and thereafter price started coming down. But when price started coming down, it created a descending channel. Descending channel and falling wedge, they are both bullish pattern. So here I can see a channel formed, a descending channel, which is a bullish pattern, and the channel was completed and price should go up from here. The ideal prediction will be that the price should go up from here, and price started moving up as well. And probably at this moment, many of the traders who observed this channel must have gone long, and look what happened next. Price dropped like hell and came down much before changing the trend again and then moving up. So in the past we have almost similar kind of situation where we have ascending broadening top followed by a bullish pattern. So a bearish pattern followed by a bullish pattern, and the bullish pattern turned to be a trap for the traders. So the similar kind of a situation we can see in the current market price. So a very, very similar kind of a situation we can see at the current market price: an ascending broadening top, a bearish pattern followed by a bullish pattern. That is why I said we need to wait for my second target. If my second target gets achieved, that will open up, or that will give us a little bit more information that which side the price wants to go, and we will be able to trade on that side. So sometimes as an analyst, you need to wait. You need to let the price prove what it wants to do, rather than always be in a hurry to take a decision and want to trade, because the most obvious trade here is to go long. But as all this past information is telling us that possibly there could be a trap, and hence what we are going to do, we are going to wait for price to come around 13,900. Once it comes to 13,900, then it will give us some more information which side it wants to go, and we will trade on that. Here I want to also tell you that if it comes to 13,900, there will be 70% or 75% chance it will go down. So the prediction will be that it can go down further if it comes to 13,900. Price is standing at a point where one of the trader will get trapped, and we as a price action trader, we don't get into a place where somebody will be trapped. We'll wait for someone to get trapped. Once someone gets trapped, that will be visible in the chart. You will look at the chart, you will know that someone has got trapped. Somebody who wanted to trade this wedge long got trapped. What's next? You are going to trade that trap for short. So I will wait for price to come down to this point, and then on retracement I can go short. So any question, any challenges? Now one more question which can come is, if price goes down, how far it can go down? As of now, what I can predict, if it wants to come down, then it will come down to this point, at least a little bit higher, maybe. Okay, so a little bit higher. Make it here. So around 12,442, where it can come down right now. And if it goes up, the going up will not be so promising, because even if it goes up, it will have to come down. That is one thing you need to know. So your question, Saurav has a question, sir, why 13,900? If it comes to 13,900, it will create a bigger wave than any counter wave which is inside this rally. So that will tell us that this wave is not going to take the price up, rather it will take the price down. Okay, any other questions, any challenges? Okay, so I feel that there is no more questions. Everybody is clear about the analysis. So as I said, I still believe that Nifty can come down, and if Nifty comes down, the best area to go long will be around 12,400, not before that. So currently, whatever you see, it can be a trap. If you are trying to go long, you might get stopped out. So this is what I see in the Nifty chart. And let the future prove that what they have in mind. When I say what they have in mind, I mean the institutions, because I believe that all the price action what we see on the chart is created due to institutional buying and selling. So I believe they will try to trap us here, and there is something cooking on. As of now, I see it as a trap. So with this, I conclude today's session. Hope you liked it. If you have liked it, please let me know with a feedback, and thank you.